And you have something interesting on your mind. Well, speaking of Happy Friday, you have something interesting on your mind, although ultimately I'm not sure how happy it is, but a bond smile. What does that mean? And I know it has something maybe to do with risk aversion.
Yes, this is what we have coined the term of this air pocket in the Treasury yield curve, all the way down to the 3-year at 1 7/8%. And a lot of people think that is a sign that investors think there's a recession. We take the view really that it's really a sign of extremely high risk aversion, which is of course very popular to talk about. And we think increasingly that's reflected in this dip in the yield curve because there's so much money in the world, a little bit afraid to be in stocks, understandably, with the big correction we had in December, what happened last month, the big downdraft, 6% on the S&P 500. But for us, this is one of the key sentiment indicators showing a little bit of actual support for the stock market, climbing that wall of worry.
Very interesting, Matt, indeed. So let's now bring the VIX into it. What is the VIX telling you? Do you want to go towards stocks, or do you want to be risk averse there?
Well, VIX is a little high at 16, but understandable given the seemingly randomness of the market. You wake up on a Sunday night and there's a presidential tweet about the trade war, markets down heavy the next day. So we've had these extremely random events. So that's kind of a part of life. But the VIX at 16, backing off slightly today in a quiet market, shows somewhat higher. The reality is the market's a lot quieter than that, but people just don't buy into a VIX down at 12 like we had earlier in the year.
Okay, Matt, and super quick, your trade on Amazon.
Amazon, take advantage of a meandering stock. Big company, but a lot of headwinds, political. Sell the 1720 strangle out next year in June, $300 in your pocket, a big return with the stock range bound.